In February 2025, the stock market was at an all-time high and investors didn't have too much to worry about until things started to change. We started to announce tariffs, and then we had Liberation Day in April, and the stock market started to accelerate off of a cliff. But then something happened yesterday. We announced a deal with China, and it was a trade deal that excited the stock market. And as of today, we are this close to breaking even on the year, and the stock market might be green on the entire year to this point. So, what is happening in this trade deal? Is it actually a win, and everything in between? And let's cut out just through the noise. Is this something that is good, and what should we investors do? Let's go ahead and break it down. So first, let's just talk about what the deal truly is. It is a 90-day deal, I guess technically 89 if you count yesterday. And what happens is the US was charging a 145% tariff on Chinese goods coming here. Now that goes down to 30. They were charging us 125%. Now that goes down to 10. Now, with that, again, it's lasting 90 days, I guess, again, 89 if you want to count yesterday. That is what is happening. Is this a win? And I've got really 3 points that I am thinking through, and I'm cutting out all of the political spin, because I think that is the issue here, right? One side looks at it one way, another side looks at it the other way, and all that noise and stuff that you may see on social media really muddies the water from what is truly happening and what you might want to do as an investor and how you might want to see your portfolio. And that's what I am here to do. All right. So the first thing is, no, I do not see this as a win. And here is why. All right. And these are questions that you want to answer rhetorically or even in the comments. All right. It's called anchoring. All right. Anchoring or reframing, however you want to call it. So let's start here. February 2025, when I said the stock market was at an all-time high, at that point, we'll see where the market is by the end of this week or even by the end of this video, by the time it is posted, is this. On most of the goods, now there were some tariffs charged in 2018 that lasted even through the Biden administration, so it's not every good under the sun, but between us and China, for the most part, we're talking electronics, toys, just basic stuff, right? What was the tariff rate? Before this administration, before February, the tariff rate was 0. That is our starting point. The starting point is not 145%. That's not where we started. That's what the headline is. That's what everybody is talking about. That is not where we as a consumer started. We were not paying a 145% tariff. That's not the baseline. So if you start that as the baseline and you say now it's at 30, that feels like a win, except January 1 of 2025, you were not paying 145%. That is not true. Most of us were never paying 145%. Now, was somebody in the comments saying, yes, we were paying 145%, blah, 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 blah. That's actually not true for most of us, unless you happen to order something from Temu and I guess you rushed ordered it here. The reason why that's not the case is because most companies stop ordering things from China because of the 145% tariff, and the time that it takes for them to make something at the 145% level and ship it here takes weeks. And then the time it hits LA in most cases and then gets to a shelf at Walmart or any of these other places can take anywhere between 6 to 8 weeks for that to happen. So no, most people were not seeing things at an increased rate at 145%. And it's also why most of us aren't going to see things at even the 30% tariff until the end of this month and going into June. That is why most people haven't seen the sticker shock yet on most products, but not all. Okay, you have to do rush shipping and a whole bunch of other stuff to really start to see that across the board. All right, so that's number one. Quick timeout. I know we've been talking a lot about investing today. However, if you don't know where to start or you haven't started yet, I have a free guide on how you can buy your first stock in just 20 minutes. To get that free guide, check out the link right here. All right, back to the video. Number two, the other reason why I don't see it as a win is because of this. What was the first tariff that was charged? What was the percent of the first tariff that was charged? It wasn't also 145%. It actually started on February 1, I believe, of just 10%. I'll put up a chart so you guys can see the entire timeline. We started off at 10%, I think it was on February 1, I'm doing this from memory, and then it escalated up, and I think we did one on steel and aluminum and some other stuff, and then it shot our way up to 145%. And then we came down to 30. So even if you start the timeline at 0, which is what I would do, because that's where we started, and you move up to just the first tariff at 10%, going from 10 all the way up to 145 and then down to 30, that's still 3 times higher than where we were from the very beginning of the first tariff. So it's still not a win. We're still paying 3 times more than where we started. That's still not a win. And at any point, paying more for something that's the exact same item is still not a win. If it was $100 for something that I bought in January and it's the exact same item, no improvements, and now I'm paying $130 for the exact same thing, I don't find it as a consumer, I don't see that as a win. I don't, that's not better. It's the exact same thing, it does the same thing, it didn't get any better. There are no improvements here. Okay, so that's just basic math. If Johnny had 2 apples, it ain't changed. Okay, so that's facts. Okay, and that's math. So that's number 1. Number 2 is, yes, the market did go up, and perhaps the market will be green and we will be positive year to date. And I think from an investor's perspective, that's a good thing. I ain't got nothing negative to say about the stock market. What I will say though is, I say this all the time, is don't get too high and don't get too low about our fervor of the stock market. And this doesn't change my view and my guidance of where things are. And that is because there's still some things happening, and the first quarter did still happen. Even though we haven't really seen those tariffs apply, but there were a lot of pauses and things that hadn't taken effect. And what happened to the economy? The economy still shrank in Q1. Now we are going to see these tariffs applied. Are consumers going to shrink? Are consumers going to pull back once we start to truly see this 30% applied across the board? And we're charging tariffs on most other countries across the world, and there are some deals coming through, so we'll see, right? But if it's 10% on other countries or 20% on other countries and 30% on China, are we going to start to see people like, hey, I'm not going to go on that trip, I'm not going to spend that money on X, Y, and Z? Is the economy going to shrink in Q2? You get 2 quarters, by textbook definition, you are going to see a recession. But then, Kevin, you told me that you also need to see consumer spending start to shrink. Okay, that's one thing. But Kevin, you also told me that you need to see job growth and layoffs and things like that. Well, about that, Microsoft today announced that they are cutting 3% of jobs. We talked, at least I did on Instagram, I'm not sure if we talked about it here, but UPS and Amazon are laying off thousands of people. UPS alone cutting back 20,000 jobs. That stuff is going to start adding up. And what if that starts to increase? That did happen. The market may have forgotten that, and perhaps they'll remember in the next week or 2. I hope not. But that is a thing. That is a thing. And my question would be, what happens if that starts to creep back into the stock market's memory? Now today, I think the stock market is up primarily because inflation did come down. I think it's a 2.3 or 2.4%. I forget the number. Maybe I'll put it on the screen or something. But that's a pretty solid thing. We want inflation to come down. But again, the inflation of tariffs is the next thing that we need to worry about. And that date has not changed. Right, that date range of when tariffs will truly be applied, and by applied I mean the time you gonna have to pay it. That is what we really looking at. So we're gonna get that data. It's going to be delayed, but that's what I'm truly looking for. When do the tariffs truly hit shelves? Are people still buying? And then what happens to inflation? And did the economy shrink during that period? Then I would argue that this is the most interesting piece of this. What was the point? What was the point of having the tariffs to begin with? The whole point was to have manufacturing move back to the U.S. Now, I agree that having manufacturing in the U.S. makes a whole lot of sense. Now, what type of manufacturing? That's the big question. Now, I've argued in this video here that no, a lot of the manufacturing jobs that people think they want or wish that they had from the 1950s to the 1980s, I'll be honest with you, realistically, that's probably not going to come back. Okay, I'm sorry, right? My grandpa had a manufacturing job, and that's what held the whole family down. Okay, so I get that. Realistically, economically, those types of jobs aren't coming back. But the thought was, if we charge high tariffs on everybody else, it's going to force these companies and incentivize these companies to bring these jobs all back here. Okay, okay. I did a whole video on how let's put our thing in caps on and let's see how that will work. So I did that thought exercise. But if we do a trade deal, now again, this is only 90 days, and that's another point that we can talk about. But if we do that, okay, if we do that, and we brought down the tariff to 30%, which is more doable. I think we all say 30% tariff is better than 145% tariff, even though it's not zero. But that's doable. If I'm a company, I'm going to just pass on the 30% to you. I'm not going to build an entire factory and pay U.S. labor cost to do that. Which one of those things is better for me? Right? Like, I'm just keep it over there. I'm not going to build factories here. So it doesn't accomplish the goal. How does this accomplish the goal of U.S. manufacturing? That to me is the thing that I don't get. That I don't get. So if the job is to build factories, accomplishing a deal doesn't actually do that. So you put yourself in a weird box. Either you charge the high tariffs and hurt consumers, right? They said short-term pain for long-term gain, which I don't necessarily agree with, or you strike a deal and give us less pain, but don't actually bring the jobs back, which brings us back to the video that I did last week, where I don't see a true winner or a true answer to this. So again, I think we're starting to see the reality of this strategy might not work in the way that it was sold, which again, blanket tariffs, I'm not sure if that's really an answer. Targeted tariffs, yeah, so there is a way to do it. I don't know if this way is the best way to do it. But what should you do as an investor, and how should you start to, attack this as an investor? I think the answer is obviously quite clear. Or let me not say obviously quite clear. I think the answer is quite clear. It might not be obvious because there's a lot of noise and there's a lot of confusion. The thing is this. This is a moving target and a moving window, okay? It's 90 days. In 90 days, things can be drastically different, or it can continue to kick the can down the road. There is also the holiday season, and if I'm a politician, the last thing I want to do is mess up the holidays by adding a higher tariff that is already here. And if I was a politician, I would just bring the tariff back down to zero and make it seem like I have solved an issue. It's an issue I created. But I would either bring the tariff back down to zero, or at least keep it to where it is, or bring it a tad bit further down. But what I'm not going to do is kick it back higher right during the holiday season. So that is one thing just to keep as a feather in your cap, right? But that's one thing. The main thing though is this: you have to have your strategy, and I would recommend sticking to that strategy, because as these headlines move, as this noise just continues to get louder, as we move towards the holiday season, as we get into the summer, and as they start to pass tax bills and all this other kind of stuff, it is going to get a lot louder, and that is going to make you feel like you got to jump, make you feel like you got to do stuff that you actually don't have to. Because remember how far down the market was earlier this year, and we are this close to breaking even. This close to breaking even. If you didn't have a strategy, you might have sold earlier. There are already people saying, I sold my 401k, I sold X amount, and I just wanted to sit in cash because of all this chaos. It was chaotic. You do still want to have some cash as things get more expensive, but selling all of it, and we are this close to breaking even, you could have missed out on some historic gains, and there may still be more historic gains later in the year. I don't know. I cannot guarantee that. However, having a good strategy is something you may want to stick to tune out the noise, right? That is the antidote to some of this chaos and some of this confusion, is having a good and clear plan. If you don't have a clear plan and you need help with creating one, these videos can help you do that.